The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Can you see me and can you see my screen this morning? If you can, okay. Everybody can hear me then. Okay, what I'm going to do is I'm going to start out with a refresher course on the trade flow chart. And I think everybody has this. If you're in the Skype room, then I know you should have it. Now, basically, you have four processes to identify a trade, okay? The first process you have is your before trading, then you have trade setup, then you have your warning process and your trade management, okay? Now, trade management mainly applies to if you are in the futures, actual contract, or you are in the spot forex. Does everybody understand that? Okay. So the first question, and every trader should do this, is, are you okay to trade? If you're not okay to trade, guess what? You should not be in the market, okay? Because more than likely, if you don't have your head in the game, okay, you're probably going to lose money. So, right now I'm doing some remodeling on my house. Some days I'm with it and some days I'm not. So this question is extremely important to me, okay? And again, if your answer is no, just don't trade, shut it down, walk away, okay? Now, if you are okay to trade, you were supposed to mark the lines on your chart for market reports. This is to keep you aware, hey, you might not want to be in the market at this particular time. Now, with the binaries, I love market reports. I trade them all the time. But on the future side, I would never do that, okay? Then we added lines to show the congestion dots and the ATRs from the higher time frames, 45 minutes and above. We drew the lines on the chart. Everybody remember that? Okay. Now, the next thing we ask is, are there any potential magenta peaks on the 45 minutes or above? Are the higher time frames overextended? And I'm going to show you today, I took a trade on the NASDAQ because the 180 was overbought, okay? These are the things that we need to do and we need to pay attention to. The new indicator does not invalidate any of that. It just makes it easier for you to see these things, okay? Now, if we do have something that is overextended or we have a magenta peak, we're going to use the Buddha process, okay? But if we do not have anything on the higher time frames saying that the market is going to reverse, we're going to use the Duke process, okay? Duke simply means that price is at an ATR, okay? The Buddha process, it has to be at an ATR too, but it's a counter trend trade, okay? We identify, don't buy the top or don't buy the low, don't sell the low, excuse me. Simply by identifying whether it's Buddha or whether it's a Duke. Both are at the ATR when we enter the trades. Does everybody understand that? Now, from there, if you'll notice over on the left-hand side, it tells you the process. This is a Buddha process, okay? That means you have a magenta peak on a higher time frame. The ATR flips, price comes back to test either the ATR or the congestion dot. Now, we always used volume divergence before. This time, all we did was add hidden divergence, okay? If you're not sure of what time frame, then I outlined it for you, okay? If you're not sure, these are your time frames, okay? A 45 magenta peak equals a 3-minute. A 180 equals a 12. 720 equals a 45. 1440 equals a 90, okay? There's no guesswork in this, okay? It's really quite simple yes or no answers. And the reason is when you're trading, you don't want maybes. You want strictly yes or no, okay? Because that enables you to follow the rules. Okay, now that's a Buddha process. Everybody understand the Buddha process? Any questions on the Buddha trade? Now is your chance to ask the question. And I'm recording this so y'all can go back over it when you want to. All right. Now, if you don't have a Buddha and price is simply at an ATR, okay, or a congestion dot works the same way. Is your higher time frame supporting the trade? Okay. If it is, do you have volume divergence at the ATR or the congestion dot? Again, what did we add to that? There's only one thing that we have added to this, and that is hidden divergence if you have the stochastics. Okay? That's as simple as it gets. Now, some of this may sound like Greek, okay? And I realize it might be a lot to understand if you're new. So I created another one, okay? And this is if you're using the ATR support and resistance, okay? First, are you at an ATR? If you are not at an ATR, you do not have a trade, okay? If you are at an ATR, do you have trade alignment? Now, what that means is you have two ATRs in your favor. Does everybody understand that? That means you have two plus signs below price, or you have two plus signs above price. Okay? And then you want the stochastics to confirm it. Now, this could be with trend divergence or hidden divergence. Okay? And this is just a simplified method for those of you that are getting accustomed to the THD indicators. Does it invalidate what we have been doing for years? No, it just makes it easier to see. Does everybody understand that? There is not a big difference, okay? The only thing we've really added is the stochastics because it gives us a really good indication. All right. Now, in this example, I'm using the NinjaTrader version, okay? And the NinjaTrader version allows me to plot 4 of the ATRs, okay? But I'm going to bring up a NASDAQ chart that just has 3 on it, okay? Just so I don't confuse y'all. And we're going to do this on a 12-minute chart. And let me get it set up real quick. Now, this doesn't have any indicators on it right now. I'm going to load the template with the 3 ATRs. That's not the right one. This is the right one. All right. So here are the 3 ATRs. The white ATR is the 12-minute chart. Okay. The blue ATR here is from the 45-minute chart. And the red is from the 180. Okay. Now, let's go back to this one. Okay. Because I really want to show you the trade I took, and I want you to walk through it, okay? Now, I've got to add the stochastics on here because we do need the stochastics. Okay. Now, is price at an ATR? Okay. I'm going to mark where my entry was. And it was on this bar right here. Okay. Do you see how price had been at that ATR? It was at the ATR here. This formed the reversal bar. Do y'all see that? Okay. Do we have trade alignment? So I'm just going to check these off as I see them. We have trade alignment because I've got a white ATR. Let me change the color on the pen. I have the white ATR and I have the blue ATR. That's two ATRs in my favor. Okay? White in the blue. Okay? Now, you need stochastics confirmation. Okay? This was the last high. This is the current high. Is the stochastic supporting that? Yes, it is. You're making lower highs with lower highs in the stochastics. Okay? Now, I came out right before the market opening. I believe it was on this bar right here because I didn't want to sit through the market opening with the trade. Okay? Now, I noticed, because I watch all of my time frames, okay, I noticed that when this was at an ATR, what did we have going on the 180-minute chart? We're overextended, okay? I use this, but I'm still looking at these charts. Do y'all understand that? I knew to look at the 180 because price was at the ATR on the 12-minute, which is the white ATR. I also knew that on the 45-minute, the ATR and the congestion dots were split. Do y'all see that? Because the blue is coming directly from this chart. Does everybody understand that? Any questions on that? The red is coming directly off of the 180. Now, this morning, there is a difference between this ATR and this ATR over here. And I do believe it's from the rollover. You've got a big gap on the rollover data, and I think that's what it's coming from. But I'm still going by this red ATR. Does everybody understand that one? It's above 80. Do you see the value on that, Charles? Yeah, this one is for the 45. And this one here is for the 180. Not a problem. Now, when I do, for those of you that are using the NinjaTrader version, the blue and the red right here on price bars, that's just the standard trend ATR. Okay, the white, because this is a 12-minute, the white is coming from the 45-minute. The blue is coming from the 180. And then I have a different red on here that is coming from the 720. Okay. And that's something that we can do in NinjaTrader, but we can't do it in the other platforms. Okay. So for example, and this is actually a really good example this morning. Do you see how these split? And it was blue and then red and then blue and then red. Remember, we used to call that snake bite area because I'm scared of snakes. So we use the RSI to identify that. Well, it clearly shows it now when you're trading with all of the ATRs on your chart, okay? Because it will do this number and then it will go down, okay? But you can clearly see it when you're looking at this. And I wait for this period to develop, and then I'll wait for this alignment, okay? Now, I'm saying that to you, but it will take you a while to understand that, okay? In other words, if I'm trying to take a counter trend trade, and we were taking a counter trend trade on the NASDAQ this morning, I do wait to see a period where it's flipping back and forth, and then it aligns, okay? Does everybody understand that? And the reason is it's going to take a while to really flip this ATR down here, okay? It's not just going to do it unless it does it at the market opening. It's not going to do it just, because it approaches it the first time. You need that area of back and forth, okay? And let's see, let's look at the Dow, and I'll change it to a 3-minute. Now the Dow all morning long has been giving hidden divergence on the 3-minute, and that was prior to the market opening. Let it come up. And let me pull this together. There we go. All right, so you see that it's moved down and it's flipped this blue ATR here. Do you see how it comes back and tests the congestion dot? And wait a minute, that is still set to the 12-minute. Yeah. So I'm going to put this on a 3. I'm going to set this to a 12. And I'm going to set this to a 45. All right, do you see how they both aligned right here? Do y'all see that? And then it comes back to test the ATR here. Look at the hidden divergence on that, guys. And this is the reason that I added the stochastics, you connect the blue dots to the blue dots on the highs, right? So if we connect the blue dots to the blue dots and the highs to the highs here, okay, do y'all see that hidden divergence there? Okay, then you go higher, but you go lower in price. Then it pulls back to this one, which is the 12-minute. Remember that. Do you see how you have the blue above and the white below? And then it flips the blue, and then you go white again. And then it flips the blue again. That was your snake bite area. And it was probably due to a magenta peak. Does everybody understand that? Can you see it on the chart now? All right, then you go lower. Notice how these align here. The white is above price, the blue is above price, okay? And yet the stochastics came right back to the same level. So you had a high here, then you had a high over here. That gives you that formation. So why did the stochastics give you an equal formation? Because that's another form of hidden divergence. Does everybody understand that one? Then you come back over here again. Again, you get a lower high, but an equal in the stochastics. Then you go lower. You still go a little bit above the last one. Connect the blue dots to the blue dots, okay? And then it goes down, and it goes down, and look, there you have it again. Do y'all see that? That's why we added the stochastics. Does everybody understand that now? And right now, you are at the congestion dot on the 45-minute chart. That does not mean that I will not refer to my charts. I still refer to my charts. Okay? So for example, when this pulled back to the 45-minute over here, that was at 451. Okay? There was your magenta peak. Do you see that? And what caused all of this downward movement? Do y'all see that? It's the magenta peak on the 45-minute chart. Any questions, guys? This, to me, just makes it easier to see. Do y'all have any questions about it? It really all works together, but this one will make it easier if you are new or you don't understand how all of the indicators work together. This will make it a little bit easier for you. Do y'all have any questions at all? Normally, Rick, I don't have the ADX on mine either. I use it in the market analyzer. It'll pop up and tell me. The stochastics will actually pop up and tell me that we're overbought or oversold. About like it does here. Now, you do have to have the stochastics on your chart to see the divergences. And there's sometimes, and it's kind of going on right here on the 3-minute NASDAQ. Do you see how your white and your blue are aligned, but the 3-minute is not aligned with either one of them? That tells me I probably need to focus on the 12-minute versus the 3-minute. Does everybody understand that? Because remember, this is a 3-minute, but I have 4 ATRs. So the red and the blue that's on price is from the 3-minute. The white is the 12-minute. The 45-minute is blue, and then this one is the 180. So I've got the 3-minute, the 12, the 45, and the 180. And even without looking at my other charts, if I shrink this down, I can tell you that the 180 ATR is below price. The congestion dot is above price. The 3-minute is in a snake bite area. And then we have the 12 and the 45 aligned to the downside. Did everybody understand that? So if I'm trying to trade this 3-minute, I'm probably going to say, I ain't trading it right now. See you tomorrow, Rick. Okay? Instead, I would come over to this one and say, okay, what does it look like over here? And you can see the 12 and the 45 are aligned. Okay? So then I'm saying, okay, is there anything here that confirms I should take this trade? And actually, you just had trend divergence over here. You're overextended over here. Not one I'm interested in. Do y'all understand that? This is your trend divergence on the 12-minute. And look over here. You're oversold on the 45-minute. So if you're trying to trade this, it might be a bad trade because these two time frames are aligned, which equate to these two over here. So I'm taking the same thing that I just did, but I'm saying, I'm going to the 12-minute because it's aligned with the 45-minute. Is the stochastics confirming this trade? No. There's trend divergence indicating an upward move. You've got overextension over here that is going to go up. Does that clarify it for y'all? To me, this is a huge difference in the way that you see, okay, should I be trading the 3-minute or should I be trading the 12-minute? Okay, any questions? This is your opportunity to ask any questions that you want. All right, if y'all don't have any questions, I did record it so you can go back and view it anytime you want. Okay. I hope you enjoyed it, and I'm going to go take my nap. Everybody have a wonderful day, okay?